What's going on, everyone? This is episode 137 of the Leadway Wealth Builders podcast. I have a great guest for you today who is Cindy West. She left the courtroom and turned it into cash flow. She's a former lawyer turned real estate investor, mainly focusing on the BRRRR strategy. And we dive into that process as well as talking where the market is going and some more fundamentals for first time flippers or first time investors. So before we hop into that, you can listen to this podcast everywhere you listen to podcasts, available on Spotify, Apple Podcasts, YouTube, and Podbean. And you can go ahead and follow me on Instagram and TikTok, where I am documenting my journey in real estate and business, also talking a little bit about travel hacking and personal finance. You can find that on Instagram and TikTok at leadway.wealth. So let's hop into the episode. Cindy, how are we doing this morning?
I'm doing good, Chris. Really excited to be here and just to talk a little bit about real estate with you.
Yeah, sorry to get you up a little bit earlier. I guess not too early here, 9 a.m. So
Not too bad.
yeah. Um we talked on the phone a little bit and I got to hear a little bit about your story, going from the courtroom to cash flow, the title of the episode here. So I wanted to, jump into your story a little bit, but I want to hear about where you're at currently in your investing journey. So give us a little breakdown about where you're at, and then we'll break down how you got there.
Absolutely. So currently I have a rental portfolio, about 40 doors. I do fix and flips here in Charlotte with my brother. We do about maybe 1 to 2 deals a month. So that's the trajectory we're on. I'm full-time now in the business. I've left my full-time career as an attorney. This is much funner, I'd say. So at this point, looking to continue to build in this business and build up a portfolio.
So 43 units. Tell us how quick you got there.
I've been investing now for about 2.5 years.
2.5 years to 40 plus units. That's insane. So before you got into it, give us a little background about where you were before you started investing, and then what pushed you into real estate investing.
Yeah, absolutely. So, probably like a lot of people, right? Rich Dad Poor Dad. When I was 18 years old, was like, I'm going to own 20 doors by the time I'm 20 years old. None of that actually happened. I went the safer route going to college and I went to law school. But throughout that whole time, I've always been very entrepreneurial. So, even before law school, I was considering starting an ice cream business, and I even took an ice cream course at the University of Wisconsin to pursue.
Really?
Yeah. So it didn't work out. And then in law school, I was like, I know I'm here and this is a safer route, but I want to do something else. I want to own my own business. And so I actually started a vending machine business. So I started that in South Florida, was running that while I was in law school. I realized that wasn't going to be my exit. Like I wasn't going to be able to do that full time. My parents wouldn't be too content with me graduating from law school and doing that full time, to say the least. So I started wholesaling during that process. So I was like, all right, I'm leaving wholesale. Let's get back into real estate. This is where the wealth is really at. Started fixing and flipping, bought like a duplex, a house here, nothing crazy. And at the end of the day, the truth be told is that it wasn't enough to justify me not pursuing law entirely after just 7 years of education. So I took the safer route. I didn't want to be risky in the moment. I was 27 years old at the time. And so I was like, you know what? I can at least do this career for a little bit, give it a shot. And I gave it a shot for about 2 weeks. And I was like, I hate this. Like, there's no way I'm going to be able to be here for a couple years like I had initially thought. So that was back in 2022, when I started getting back into real estate and buying properties here in North Carolina, and ultimately ended up moving out here. And that's kind of how we got here.
When you were studying and you started wholesaling, you had a couple properties while you were still in school, is that right?
Yeah, that is.
Gotcha. Okay, so you had a little bit of a head start there. And then, what was it in those first 2 weeks of, being a lawyer that you were like, no way, we gotta have a different route here.
It's just very cut and dry work, at least what I was doing. So I was in mergers and acquisitions. So I'm just reading contracts all the time. It's not the funnest thing.
Hmm.
And it was still partly remote. And so I was at home. It's isolated in essence, right? And I like to be out and about and engaging with people. So I think I just quickly realized, even having that experience in law school of wholesaling and flipping, like I was meeting with sellers, I was interacting with people, and I realized that I love that aspect of the business, and not getting that experience on the legal side was like, yeah, it's not a personality fit at that point.
Yeah, you're pretty outgoing. So I know you're doing a lot more speaking events. I'm like, that would be pretty rough just being behind a desk working on contracts all day long. Um, so yeah,
Like that big mahogany desks, like conference rooms, people in suits and ties, when you go in the office like once a week, it was just,
it
uh,
looks cool on Instagram, but once you actually do that and you're sitting behind a desk for 8 hours, what were those weeks like? Were they like 70-hour work weeks or more closer to 40?
oh yeah, no, 100% the former, I'd say. So you're working like 40 to 60 hours. And I think the breaking point for me was always the working on the weekends, because that's
Hmm.
where most of your workload is going to come on. It's going to come that Friday night or that Saturday night when you had plans to see your family, to go out to dinner with your parents or whatever it is, and having to tell them like, hey, I can't do that because I have to work. I
Hmm.
just hated that. I feel like I was pausing my life essentially for this job, and I wasn't living my life. Even though the income was great, I couldn't enjoy it on the weekends or with the people that I loved. And that's the hard part. Like working a lot of hours isn't hard when you can control when you do that. You know what I mean?
For sure. For sure. Yeah, that's a big thing for my wife. She's like, "Hey, you are not working on the weekends." I'm like, "Well, all right. That's tossed out." So,
Yeah.
yeah, yeah, we follow the same pattern there because I was kind of thinking along the same lines as you because I worked like a full year and a half out of college. And then, I'm like, all right, this is working for a startup, not making money. Pull some money out of the house that I renovated. And then my mind went to the same as you. It's like, oh, well, I can do vending machines. And it's like, okay, but that's not, that's a little extra like side hustle, but it's not going to be that full income. And that's what really kind of pushed me more into the flipping houses. So, and then piggybacking off of that, so you scaled to 40 rentals in just basically two or 3 years. So, um, how did you do that?
So I was doing the bird. Like I've always done the bird. That's how I have all my rentals. So I'm buying them with hard money, rehabbing them, renting them out, then refining out on a DSCR product. So I started with houses, was just buying, like one or two, like every other month essentially. And they were
Mhm.
cheap houses to be clear, right? Because you still have to bring a down payment to the table. But I was buying cheaper houses outside of Charlotte. So I was able to do that. And then it became okay. I locked up like a portfolio of like three houses, and then I would lock up like a triplex here or there. And then I did the big ones last year, which I did an 11 unit that I Burr as well. Just finished on the refi this week actually. And I did a triplex as well. And now I have a 10 unit that I'm doing the same exact thing with. So just quickly realizing that in order to scale up, because I knew I wanted to leave my job, I had to have a certain amount of units. I quickly realized I wasn't going to have a 20% down payment for 40 doors. So it's like, okay, how do I do this strategically so I can actually get to this amount of cash flow essentially, right? That's always the goal on the back end.
Yeah.
And it's always just been through hard money acquisition and then refining on the back end.
So you were having to bring a little bit of money to the table. Were you going and raising that from somebody else, or were you self-funding at that point?
So initially, yeah, I was self-funding it. So it was probably about like 8 to 9K because I was buying
Really?
like cheap houses that were like 80 grand, right? So hard money is like 90% your purchase price and 100% of the rehab. So I realized if I bought a house less than 100,000, I could figure out on my own the $8,000 to $9,000 that I would need to bring to the table.
And that was before Charlotte really scaled up and got crazy in numbers, or were these like specific areas where you're finding those type of deals?
Yeah, I was mostly outside of Charlotte, so I was primarily in like Hickory and Lincolnton. I don't
Gotcha.
see those numbers too much anymore, to be honest. You're probably seeing like houses go for like 120, 130.
Hmm.
Back then they were like 65, 75. So I could get away with that price point. And then also, even though they were cheap houses, I knew I could refi on the back end. Like the value was there, and not tremendously, right? We're not talking about $250,000 houses, right? The refi, the appraisal will probably come back at like 150, 140, 160. So I could kind of make the numbers work in that sense.
Yeah, because that's enough to be able to get your money that you put into it back and then be able to do it again, like the clean burr, right?
Yeah, yeah, 100%. And then it's still cash flowing decently. So
Yeah, it's especially when you scale up that quick. I mean, that many units, even if you're getting $100 a unit, that's gonna, yeah, I mean, that's an awesome scale up right there because I think that's something we all want to do. And we hear somebody who's done it in, a year or two, and it's that 18-year-old making $1 million a year. It's like, how do we get to that? So that's why I like meeting people in this area, who have done that. It's like, okay, well, how do I just go do what you do because you obviously have a system, you follow the process, you have safe numbers, and those are the people you want to just I want to do the same exact thing you're doing. So um so scaling to the 40 units, do you self manage those, or do you have your own a company that kind of manages the units for you?
no, I still self-manage everything myself. So
Okay, so is that kind of the next step you're working towards, trying to get out of that position, or do you not mind
yeah.
it?
To be very honest, I don't mind it right now. I think people get so scared of self-managing. And at the time, though, I remember when I was buying these units, I had an agent, and he would help me lease them out, and he would just tell me like self-manage. Because I actually tell him like, "Hey, I'm gonna pass this off I'm gonna find somebody." He'd be like, "You don't need to." In your mind, you think it's all this time, and in reality, the other day I was thinking about it. I probably spent about 3 hours on my portfolio a month. So
Wow.
it doesn't justify the cost, right, of paying a property manager 8 to 10% of my income or of the property's income to go to that. So at the moment, it doesn't justify the cost, I think, but there will be a point, I'm sure, where it's like, all right, I have to offload this because it's, instead of 3 hours a month, maybe it is in fact, 10 hours a week now that it's taking and tenants want more sophistication, right? I think that's going to come with it.
Gotcha. Yeah, that makes a lot of sense because in the mastermind that I'm in, they just walked us through their property management, and they self-manage, and they're starting to hire people out because they have about 40 units or so. And but that's single family houses. It's not like an 11 unit or all in one spot. So yeah, that's interesting to hear. So I guess what software, what apps are you using to be able to manage those?
Yeah, so right now I use apartments.com and I've used them since my very first unit and they're pretty easy. It's free for landlords. You're able to track, rents coming in, tenants can pay online for free. It's a free software, very simple. I do think I'm outgrowing it a little bit. I'm at that point where I'm like, all right, maybe it's time that I pay for a software that has a little bit more features and, QuickBooks is maybe integrated into it, but even at 40 doors now, right, it serves its purpose, which is just having tenants be able to pay and be able to track, your income in a central location. So if that's all you need to start, right, to manage. You just need a way for tenants to pay their rent, for you to see if they pay their rent, and then of course, like communication. I have like Open Phone, which is just an app where people can communicate, so they're not texting my cell phone,
Mhm.
and that seems to work pretty well. Like people just text that number if they have a maintenance request or anything like that.
Yeah, I love that because anything we really listen to now, whether it's Bigger Pockets or any of the real estate podcasts, they're talking about Appfolio. You got to have this software and the CRM and the property management, and I'm like, man, that can add up really, really quick. So
Yeah.
I hadn't heard of anybody using what did you say, apartments.com.
Yeah. Yeah, that's a free one, man. And obviously I've heard of like the ones you've mentioned. And I'm sure it's worth like the 50, $100. But if you're only making, 250 off a door, it's like, does it make sense to go and spend 50, $100 for a software? That's half your income right there. So at the beginning, I've always just been really cautious of what I'm spending my money on.
Hmm.
because I'm not rolling in dough at the moment, right? So I still have to be pretty cautious of where the money's going.
Yeah, that makes sense for sure. So are you still, with this many units and that cash flow coming in, are you still focused on the same trying to do the burr process for every single house you do now? Or since you have this many, are you starting to see like a bigger end goal to where you can be putting your money?
Yeah, so right now I'm still doing the burr. I'm just doing it now, focusing on the commercial side. So I did that 11 unit. That was a burr. Did the cash out refi. Now I'm doing a 10 unit. So I want to continue doing it because it's essentially no money out of pocket, right? So when I looked at my whole portfolio, out of the 40 doors, I probably have like $23,000 that I've left in some deals, but in total, right? So essentially, I scaled my portfolio with only $23,000,
Hmm.
or that's what my injected cash into it. So I figured, okay, if that's the case for those doors, even enough, I have more money, I can just scale up and just do bigger deals, less amount, right? But just more unit counts for each deal. And ultimately, the goal is to have a large portfolio where I don't have to fix and flip on a daily basis, right? I could actually truly quote unquote retire and have monthly income generating. And I think one of the biggest things for me is I have an advantage now, which is my lender. Like when you think about, okay, how did I scale up in 2.5 years, right? One of the biggest things I tell people that I think I attribute a lot of my success to is my hard money lender. So essentially with them, I only have one hard money lender that I do all my deals with, to be honest.
Hmm.
And the reason why I do that is because they've seen me exit so many times that they had increased that 90% of purchase price to 100% of purchase price. So now I'm not bringing any money at all to the table because I've built that rapport with them. So I think it's key. I know that everybody's always shopping around, like what's good, like what rate are you getting? But if you find a good lender and you can establish rapport with them and a good relationship, and they see you consistently doing deals in a specific market, and then you keep bringing them deals, they're going to want to lend you money. And then at that point, you have unlimited money and you can go and buy whatever you want within, right, their frame of their buy box, right? 70% of our ARV. It has to be truly a good deal. But that's been the key for me. And now that I have that relationship, I'm like, why not just leverage it to the maximum, ability that I possibly can? Because I don't need money now to bring to the table. I just have to bring the deal.
Yeah, I think that's a great point for people starting out because, like, the mastermind that I'm in, it's like I was dealing with, or I was in the group with people who have just started out, and they're trying to shop for everybody, try and get all these quotes, and oh, I didn't like the terms on this, so let me jump over here. I've kind of done the same thing that you've been doing. It's like I'm working with one guy for the same company, and we've done that on all of our deals so far, and they're starting to give me a little bit better terms. So I know I'm getting close to it, but I love that point right there. It's basically finding your person, sticking with them. And there are like little things to be able to negotiate, but like the origination points, but doing as many as you have, not bringing anything to the table, I think that's such a great point for people starting out.
Yeah, no, that's awesome to hear. Like you're seeing that too, because I think that's like the nuggets that nobody really talks about, right? Like even origination fees or even like points and interest rate, it's very expensive, whether it's flipping, whether it's burring. Like hard money is so expensive
Oh yeah.
that if you just build rapport and those terms start getting slightly better, at the end of the day, that's affecting your bottom line, right?
Oh, absolutely. And that's the things like I've been only in it really for the last year, and I've been kind of starting to see those different things. Like I had a hard money lender I interviewed just not too many episodes ago, and he was breaking down those things. I'm like, "Hey, asking for a friend, what does this mean?" So he's breaking it down to me, and that's where I really wanted to start on the podcast is where, hey, for somebody starting out, you know who are these people doing it in your area, and then how do they start? So for you giving advice to somebody just starting out right now, what I guess what would you say is the best route for somebody who is in your position? Say they want to leave their job in the next year or two, maybe something a little bit sooner. What's the best way to get in today's market to be
Okay,
able to.
so I think it depends in part, obviously, on what you like, honestly.
Mhm.
So, and I know that's very like cliche, but hear me out.
Oh
And
no,
this
that's great.
You can make money in any single way, right? You can be an agent, you can be a wholesaler, you can be a flipper, you can go build homes, whatever you want to do. And I think that too many times people are just so overwhelmed and they're like, should I do Airbnb? Should I like midterm rent? Like all these things. And it's like, just figure out what you really want to do. Like for me, some people don't like being a landlord. I knew even as a lawyer, I was like, I'm perfectly okay with being a landlord for the rest of my life.
Hmm.
Like I don't mind it. I don't mind talking to my tenants. I'm a lawyer. I don't mind doing evictions. Like I've realized I'm content with this role. And so I don't look now to do a million other things. And I think the easiest way to start and then to scale is if you just pick one thing and put your blinders up because everything is going to look like it's a pot of gold on the other side. But if you're constantly chasing that, you're not going to really get anywhere. So I know there's a lot out there. Choose one thing, research that one thing, right? If that's what you're going to do, commit to it and just do it for 1 year consistently, right? 2 years, and then decide, do I actually want to do this, right? Like I've been flipping now since last year, August, full time. And I'm coming up on my year, right? I'm like, I don't know if I love this, right? But I've
Hmm.
consistently done it now for a year where I wasn't flipping and then let me go buy an Airbnb as well. And let me do co-living at the same time. Like you have to just at some point pick something and just do it. So that's always my recommendation to people.
Yeah, that's great advice because figuring out, what your perfect day looks like and then kind of backtracking, it's like, okay, well then how do I get to that point? Is it the active income through flipping to where then you're building up that income to be able to then push into rentals? And I think that's the best answer. I wasn't being sarcastic. I'm like, because reading a lot of books. Vivid Visions, one of those, from Passive to Passionate, Brian Lubin. That's another great one because that's what he talks about. Um, so it sounds like you're stealing all these quotes from these books. What books are you reading right now?
You named the few that I should be reading. I've heard a lot of good things about Vivid Vision. I think right now, what am I reading? I'm really reading right now about it's called The World Changing Order. So it's
Hmm.
actually not a real estate book at all. It's just an economics book. But I bring it up because it's saying a lot about where the country is at. And so I'm the type of person I don't watch the news. I just think it's incredibly negative,
Oh
especially these
yeah.
days. So, but just reading, like, what do I think is really going to happen? Like, where's the housing market kind of going to go? Where's the country heading? And just kind of figuring out, right, like where are the opportunities? Um, Another book I really love is by Patrick Bet-David. I don't know if you've heard of him or followed him.
I
Um,
know the name. I don't think I've read any of his books.
yeah, he has a really great book called Your Next Five Steps. And I read that book about a year ago, and it was just incredible, right? It's just very basic. It's like figure out what you're gonna do, right? And then just write down what are the 5 steps you need to do. Like, what are your next 5 moves? And I think just that type of simplicity, you can apply that. It's not a real estate book, right? It's a business book, but that type of
Hmm.
simplicity you can apply it to anything. So I would say those are kind of my two favorite books right now.
Yeah, not now that you say it, I think I do have that one sitting on the shelf. I'm reading the Surrender Experiment right now by
Oh, I've heard.
Michael, I think it's Michael Singer. Yeah,
Are you
that's
liking it?
I'm like a quarter of the way through and I think I'm still in he's kind of getting to the surrender part, how he's just kind of letting life happen, pretty much saying yes, thinking through his thoughts. Man's search for meaning, kind of the big quote I read in that one. It's between stimulus and response, there is space, and that's kind of it's not said in the book, but it's you can kind of see the outline of it. So that's one I'm reading right now. But for the business books, that's what I really started reading, and it really changed my mind towards working a W-2 job versus becoming an entrepreneur because something I was seeing in the startup, that hey, we want sales, we need sales. On day two, I'm saying you guys need an operations person back here, not another salesperson. And they just couldn't see through that. So in month seven, I'm saying the same thing and they can't break through that wall. But it was because those business books to where I could kind of point out, I'm like, okay, this is your next hire's operations. Then you get somebody to take over your, like daily little email messages because this isn't even sales. All your sales are through your, email marketing. But, reading those business books, how has that changed your mind compared to just reading a real estate book?
Yeah, I was actually going to ask you this question, so I'll throw it back to
Yeah.
you. Do you see your real estate investing as a business? Because I do, and a lot of people don't, right? So what's been your journey like in that sense?
Yeah, that's where I'm, in the beginning. So I've documented basically from quitting my job to where I'm at currently on the podcast. So, quitting the job, buying the first flip, and really just kind of learning the numbers. I think profit first was a big eye opener for me because I really understood it on the number side a little bit better. And that's where I really did the big pivot. It's like, I'm not going to make money, being in this situation. Look at the five people you're around. You're going to be the direct result. And that's where I'm starting to make those pivots now to where I realize, the numbers are everything. And if somebody's, pushing me saying, oh, well, you could just put this into it, you could do this for 40 grand. And I walk it with my contractor and he's like, hey, this is going to be 60, you know, that's off. So my numbers are the biggest thing. And that's where, it really tightens the box on where you can buy. So that's where I'm starting to look in different areas rather than playing the big market like Charlotte. So as in running it like a business, yeah, starting to do that a little bit more. And that's where the profit first really kind of um, changed my mindset. Then time blocking. It's like, where am I spending my time? So yeah, the business books have been huge because it's a broader and bigger view in my opinion, rather than, hey, how do I go get another deal?
Yeah, 100%. I love Profit First. That's such a good book.
Oh yeah.
Uh,
Did you read the real estate one too?
no, I don't think so.
Oh yeah, that one's a really good one because I thought it was just the main profit first book, and they said, "Oh, have you read the real estate version?" I'm like, no, because I'm thinking that's just for landlords. Oh no, it was perfect. For flipping, for buying and selling companies. Oh, awesome. That's what made me switch to Relay Bank. Halfway through that book, I signed up for it, got everything moved over. Um, and then yeah, I love Relay. It's just a lot of wires, but the wire fees are cheap. So yeah, definitely a big one there. Have you used it?
I have not, but I've read Profit First and like saying it was just eye-opening of, oh my gosh, like I've never paid myself, right? Something there's money there. It's like, oh, I just especially as a landlord, right? Because you're not making so much. You're kind of just leaving the funds there and so that book though was very eye-opening of like you're an operator, right? Like you need to be paying yourself. And even now, um, this year we have like a real estate more focused accountant and they're telling us, structure, do these tax strategies, right? You should pay yourself like this and your payroll. And so now it's like, okay, this is actually an operation, a day-to-day operation, not just, oh yeah, I'm real estate investing for the long term.
For sure. For sure. So, going back to what we talked about a little bit ago, focusing on that bigger picture. So, where do you see that bigger picture of real estate heading? It could be, I would say, like in our market here, with an hour of two of Charlotte, where do you kind of see that going?
It's gonna definitely become more renter focused. There's obviously the homes are appreciating tremendously. People are buying up, whether it's house, whether it's land. The price is increasing tremendously. So if you can get in right now, highly, highly encourage it because it's only going to get more expensive. That's just the truth. I think I saw an article today that it was saying houses are projected around. There's like 10 cities in North Carolina that houses are projected to drop, right? And they're gonna drop like 0.5%. So not much, right? But Charlotte specifically is going to actually increase. So you're seeing like the major cities, they're actually going to continue to appreciate despite everything that we've seen with inflation and the economy. So I think it's going to get more expensive if you can buy assets that you can actually rent out. That's going to do really well. So that's why I like the multifamily game. A lot of people stayed away from it the last year. I took it as an opportunity to actually get a shot at making offers because people are ultimately going to be looking for a place to rent because prices are going up. People can't afford these homes. So they're going to be looking for places to rent. If I can offer that, why not?
How do you see co-living fitting into that picture? Because that's kind of the big thing now. Pad splits at every meetup, trying to get and because I did a small interview with them, just off the podcast, and they kind of said, this is where everything's going. We saw the map, and there's barely any rentals. We look 2 months later, and it's so many more units. So is that something you see playing into the market here?
Yeah, 100%. I mean, a lot of people now are doing co-living, right? It's like we went from Airbnb to like midterm rentals, and now it's all about co-living. And I can see the demand there, right? Like people that are in major cities, they obviously don't mind living close to each other and having amenities and all that stuff. If you're going to be buying in a major city, I do think that's the way to go. My concern with that, or the reason why I don't execute on that, is I think it's hard to do the burr on it. From a DSCR perspective, if you are buying in a major city where you're not going to be able to justify cash flow based off regular and long-term rents. But that's just my intuition when it comes to co-living and that it works in major cities. Obviously, there's opportunities outside of major cities, and if you want to go for the smaller price homes, that still exists, right? 100. I know we talked about 120,000 compared to 70 grand when I was buying, but $120,000 for a house is still pretty freaking cheap, right?
For sure.
So there, both can work depending on what your strategy is and how much you have to put into it.
Yeah, I definitely agree there. I have more people in my ear about co-living and this because I was medium term rentals there for a while. Like that's what this house is going to turn into, just a little two bed, one bath near a hospital. And then that's what I originally bought it for. And then I have somebody who wants to do Airbnb, then I have co-living. So yeah, it's definitely interesting here all the different people. And then I meeting people who do all the work on the flips themselves, and then meeting someone like you who's done the burr process and still sticking with that. It's so interesting to hear all the different strategies. I love it. So,
Yeah, I mean, I think you can see it all works, right? Like for you, where you're the house you're in right now, it could work for co-living, it could work for Airbnb, it could work as a midterm rental because of the location you're in, right?
for sure.
For me, based on the houses that I buy and the locations, those wouldn't work, right? But other things work. So I think it's always like there is a deal out there that will work for what you're looking for and based off the geographic location. It's just like where are you buying at and what do you want to do with it?
Yeah, I don't disagree at all. Well, Cindy, I really appreciate your time. Last closing question here is, if someone wants to get in contact with you, work with you, what's the best way to do that?
Most definitely. I'm on Instagram, Cindy West underscore. You can find me there, DM me. I try to put out content on flipping and rentals and all that. So, yeah, give me a shout through there and would love to connect with your audience as well.
Awesome. Awesome. Well, Cindy, this was awesome. So, this was Cindy and Chris on the Leadway Wealth Builders podcast. We'll see you on the next one.